Good to see everybody here. I see a lot of friends, a lot of friendly faces. Thank you so much for making time to listen. Hopefully, we can give you something interesting to think about. So, I'm scheduled for these for the next 2 days. I have this one and then one on Monday. So, I'm going to do a selectively deep dive into some of the important concepts that have come out of our work over the last couple years in COVID, and but also be kind of broad on sets of topics. So if there's things that trigger with you that you'd like to hear me talk about next week too, I'd be happy if you could send me some questions to focus me for next week as well. I have some material, but I would rather answer your questions than try to come up with something interesting on my own. A couple things that I want to hit right off the top. For about 15 years, we've been adopting an ecosystem approach to our trading practice, by which I mean that we consider it to be a rich, robust, broad environment in which there's a lot of actors and forces and facts and themes and seasons running around in a reinforcing system that finds equilibrium and rewards adaptation. And everything that we've learned from the last about 3 years of working through COVID has reinforced that approach is rock solid, and that we've noticed our trading practices have been improving every week, every month, every year by doing so. A couple of things that really jump out, if I had to pick the top three, I would certainly include these three. The first one is the top level process of plan, prepare, execute, and assess has been a very trustworthy framework to approach challenging times. And I've chosen the font on there with care. For me, the planning is in small caps, there are small lowercase. And in my view, planning is as important in the process. Well, it's just like teaching my little 5-year-olds how to play soccer. And yesterday on the soccer field, we just had a wonderful time, and we learned how to play soccer with our friends. And at every break, and especially at halftime, all I did was ask the kids, hey, who's got a plan? And they all had a plan. And their plan was, well, little Cooper said, I think that we should all guard our goal and then get the ball, go to goal, shoot and score. And I thought that was an excellent plan. It gave us just enough structure. It gave us some priorities. It gave us all a focus and purpose, a direction to go, and it told us what success looked like, and we could follow that recipe in sequence. Little Benson, who's my most skilled little player, at 5 years old, I can already start teaching him how to play a position on the field as a sweeper, to stay behind the mob, and to wait for the ball to pop out while he guards our goal, then grab the ball, and then go around the mob and go right to goal, shoot and score. So we combine all of those into plans, and I reinforce it with them in simple terms, with enthusiasm and a sing-song voice that they repeat after me. And in that way, we have just enough information to keep going. Now, the next word in that, prepare, is in all large case. And the reason for that is that that's where we make all our money. That we're not sure what's going to happen next on the soccer field, except it's going to be surprising and exciting and a lot of fun. And when we see an opportunity, we can do something with it if we're prepared. If we're not prepared, we won't even see the opportunity. Because part of preparation is learning how to reinforce the patterns that you're hoping to see, and then what you're going to do with it with standard work when that opportunity comes and you have the resources, the focus, and a process to follow. So in the time before execution, planning and preparing, if that's what you're doing, I'd probably have 20% on the plan and 80% on the preparation. All other things being equal, I would rather be unplanned but well prepared for a demanding world. Now, if we've done our job right in preparation, execution is important, and we should do that in a standard way with battle drill and SOPs and reinforcing behaviors and a implementation that makes it easy to do the right thing and very hard to do the wrong thing. So we want to take the path of least resistance towards excellence in execution. Now, if we survive the trade, and we should survive the trade because we've been using good risk management techniques as part of our plan and prep, so that we're only trading at a level where we can stay in the game for the next 1,000 trades. So I shouldn't be looking at each trade as an existential risk, because that becomes worrisome and makes me nervous. It generates a lot of energy, but I would rather approach the markets in a state of calm discipline, well prepared, with a light hand on the reins, with a comfortable tool that I'm skilled at using, properly calibrated, ready to go. Then I should be able to survive that particular trade, because I always know where my out is. I know where my price is that's going to invalidate the hypothesis, and I'm ruthless about executing on that. Well, if I survive the trade, then assess becomes important. And then the assessment is every bit as important as preparation. The secret sauce here is that the assessment of the previous trades is part of the preparation for the next trades, because that assessment is going to consider the plan, the preparation, and the execution. In fact, it's almost meta assessment, because you're also going to take a look at how well you are assessing those things. So you're going to assess the assessment. It's that important that you get results from a trade, but it's part of a series of trades, a family of trades, a histogram of trades that you're trying to learn from about your relationship with the market, the relationship of your system with the market, the relationship of you and your system together. So that constant assessment allows us to stay calibrated and adaptive with what's going on right now. So that's an essential process in our ecosystem approach, that we intend to be a learning organization. We intend to be learning from what we're doing while also getting paid to learn. So if I could leave you with one thing, I would just say that plan, prepare, execute, assess is a rock-solid process that you can use to improve your performance in any effort. But if I had two things that I could say, I would then say trade framing and visualization are essential. Trade framing is the standard work that we do to lay out the ecosystem that we're trading in. We're looking at the idea behind the trade, what it should do under unsurprising conditions in both directions. We're framing out what the standard risk and the standard reward looks like to determine if it meets our criteria for a tradable frame. And in that trade frame, we're considering ideas like, do I stop and reverse if my initial stop gets hit? So I got to frame this in both directions. If we're doing it properly, the answer to that could be yes. We're looking at the larger frame of the sector in the market that this target is operating in, so we can see what the influence of those ecosystems looks like on the way our trade could unfold. The trade framing and visualization includes normal moves and abnormal moves, and we establish a boundary where we would classify the move as abnormal, because the move from our entry to the edge of normal should be at least a 2-to-1 routine trade that justifies me getting into the position. But there's some price in every trade that says if it gets beyond this limit, then something abnormal is happening. Something abnormal means that traders from other demographics and other time frames are seeing things that are piling onto that trade that we weren't entitled to expect, but we're not surprised to see. So abnormal conditions is an indication that we're into the next possible phase of this trade, and it could be amazing. Well, since it could be amazing, we want to take all that anxiety and joy and emotion out of it and just say, well, if it gets past this price, it's an abnormal move, and I want to apply standard work to abnormal moves so that I know what I'm doing in that trade at that moment. So the visualization helps us determine those boundaries between normal and abnormal and allows us to rehearse different scenarios about price. Could it go up slow? Could it go up fast? Could it go up far? Could it go down the same way? Could it just drift sideways with increasing volatility until it breaks out? Or could it go sideways with decreasing volatility until it compresses into an even more critical state? That would be a good thing. So the trade framing and visualization is the relationship that a craftsman has between imagining what the final product might look like and the techniques that he's going to use on how to get it there. And when they're first looking at a chunk of stone or a block of wood and they're imagining what that end state might be, there's more than one way it could come out, and so we're mindful of the different possibilities and the techniques we're going to use to uncover and exploit whatever that trade may be. And because we're working with power tools, we're going to make sure that our safety factors are in place, that we're not going to cut our hand off with a power saw. And so we're going to manage that risk throughout all of those. So that's what I mean by trade framing and visualization, not just where it is, but where it could go and how it could get there and how we might be acting and deciding along the way to follow our standard procedures or standard work. So those would be the two things that I would share with you that we've learned from COVID. But if I learned three things from COVID, I would add to this the importance of collaborative learning. And there's a couple reasons for that. One of them is that trading can be a very solitary enterprise, and recharging your batteries through social contact with trusted others in a professional setting is a reliable way to stay grounded and calibrated and in the game, to receive support when you need it, to give support when they need it, and reinforce the ties that bind us together into a trading tribe or a community of practice. We all do better when we learn together. And what it takes to develop a collaborative learning environment leads back to the idea of the ecosystem approach, that by recognizing people are in different places, they have different learning preferences, they have different strengths to bring to the table and insights and needs that the group may be able to support them in satisfying, the collaborative learning environment becomes a very powerful edge in any kind of trading that you propose to do. My view on that is that by bringing a wide diversity of traders together, you're actually doing a better job of protecting you against the abnormalities that the market can throw at you, because you're getting a much wider range of experience, different perspectives, new insights that may not be apparent to you inside your chosen time frame. So a collaborative learning environment should be something that's high on your priority list if you propose to stay in this game for a long time, because you want to be able to leverage the power of the team, and you want to support the team. I'm thinking of Rudyard Kipling's Jungle Books, in which he says the strength of the wolf is the pack, and the strength of the pack is the wolf, when he's teaching Mowgli what's up. So those were three elements of the ecosystem approach that have really become apparent to us in our nightly strategy podcasts, our weekend strategy podcasts, our bar by bar coaching exercises, in all of the courses that we've been teaching, that the collaborative learning environment is a crucial element of what it is that we do. I mean, that's not surprising. I teach at a military college for 23 years now, and every year the number one most important part of the learning environment that we create at that school, in the words of the students themselves, who are all successful professionals going back out into the world to command large army organizations in combat, invariably, consistently, and almost unanimously, the number one most important contribution to their personal learning is the crosstalk that they get in our classrooms between their trusted peers. These are the folks that share a common purpose, a background, an identity, and a mission going forward, and they plan to work with each other for the next 10 or 20 years inside of the profession. And so if a collaborative learning environment matters to them, and if visualization matters to them, and using SOPs matters to them, hint, that's trade framing and visualization, their top level process is plan, prepare, execute, and assess. And the similarity in the missions and the similarity in the stresses and the types of decisions they have to make means that the things that we're learning from our military classrooms and how to survive and how to succeed have a lot to do with developing that same kind of mindset in our trading. And so we are ruthless about applying those kinds of insights. Well, if I was going to go next into the big ideas that I really want to share, these are some of the most important tools that come out of the learning. These are the 5 tools that I want to talk about. I would be remiss if I did not, praise the hard work of the students that are showing me just how important this stuff really is. And what I've learned over the last couple years is that if you are a coach, show me your players. I work with a lot of soccer coaches, and they talk about how coachy they are when they're coaching the kids that they coach, and they're being a coach and doing the coaching, and it can be tiresome at sometimes. And all I really need to know about a coach is show me how your players play, and I'll know everything I need to know about you as a coach. And similarly, if you're a teacher, show me your students. So I want to just give a hat tip to the graduate students that are getting it all done. All of them are professional traders. Each one is doing it in their own particular way and applying the things that we've learned together over the last couple of years into their own personalized, self-adapted system. Luke Crockford in Australia, a CPA by training, hadn't traded all 2 years ago. Got 7 kids, and his wife is a serious person. And he's got a good business in Australia. But after 2 years, he's got 3,000 live trades under his belt on the 5-minute Aussie US dollar pair. His win rate is 60%. His scratch rate is 20%. His loss rate is 20%. So on a scratch, he gets his money back. So if you isolate out the wins versus losses, he's got a 3-to-1 win rate. And his average winner to average loser is 2-to-1. And I would just ask you, how many times a day do you want to trade that system? How many of those signals, when they come into the standard pattern, do you want to take? And the answer is all of them. That's what you want. You want all of them because there's no overnight risk, and it's a robust liquid system that he can trade 24/7. And he's got those 3,000 trades documented and posted every night, his daily trading performance, where he gets 5 minutes of coaching from me in our nightly strategy podcast. And we review the setups, the entries, the management, the exits, the re-entries, all of that, and his emotional states of mind. And we use that to update how we're doing. And he takes those 5-minute debriefings, and he's collected all of those and turned them into a personal video learning journal with all his annotated charts. And that's what he studies because, as I said, his wife is a serious person. He's organizing the Aussies into a community of practice to deal with their time frames and whatnot down there. Ken H. is a full-time corporate executive in the software industry, manages a team of experts. He has settled into swing trading one day at a time and does our weekend swing trading framing. And he gets weekly coaching from me, and he nominates 15 or 20 excellent swing trade frames every Saturday night after listening to the weekend reports on Fridays. And that is a masterclass in swing trading, the way he's doing it. Phil Wu and Griff Cooper, a couple super traders, have become our tool room custodians and note masters. As interns, they've gone through all of my workshops and created concise student notes to include an updated glossary. And we make those available to all the students so that they can see what's in each course in every video with timestamps, and then ensure that we are well prepared to engage. Griff Cooper took the Kata 2 challenge, which was to trade a single instrument every day, intraday, no overnight risk on 3 different patterns. And it's so good that I've forced him to develop a Kata 2 home study workshop that shows how he took my general guidance on how to develop a system and the Kata 2 challenge patterns and turn it into a personalized system that he has executed, and he hasn't had a losing week this year. So that's a nice home study course. I've asked those guys to produce courses because it's been my experience that by learning to teach your course, your system, you actually learn your own system better because it forces you to become explicit about what you mean. And it exposes you to questions and answers from students, which force you to clarify things that you thought were clear but might be a little fuzzy. Bill Scheidt and Jeff Boccaccio are working with the Tharp Institute to produce a crypto swing trading course that you're going to be absolutely blown away by. Same thing, only using crypto and some standard patterns and disciplined approaches. Glenn Osborne has become a marvelous coach and is also doing swing trading, and he's been helping guys like Constantine, who's now a prop trader and has been using a couple of our standard patterns intraday on symbols that he's become expert in, like the gold dollar spot price in the futures, and is now prop trading and is on his way to trading $1 million of somebody else's money and is crushing it. His annotated trade frames are master classes in and of themselves, and I do my best to give him coaching to nudge him here and there. Tom H. has been turning our collaborative learning process into a generalized approach on how to use leadership to build teams, to be a servant leader, and he's exporting this into corporate world with great results. And my brother, having survived open heart surgery, God be thanked, has decided to lower his stress level by retiring from his job as a hospice nurse and become a full-time trader. And so we've developed the sniper trading strategy that maps what it is that he does with these patterns, and I'll show you some of these in a minute when I talk about compound critical states. But I just wanted to acknowledge that those guys are doing the heavy lifting every night. They're amazing students. They are becoming amazing teachers. And every one of them has made me better at what I do thanks to their hard work. So I'm grateful to them. You can listen to their annual testimonies from last year at tortoisecapital.net on the homepage that talked about where they were a year ago, in December actually. And they're going to be preparing their updates for this year, but you'll be astonished at where they were last year, and they've only gotten better this year. So I want to point that out for you. I want to say just briefly, these slides are available to you, and Sarah has them for download. But when I say that an ecosystem approach, what I mean is this in general, that we basically break down our instructional material and our operational material into chunks so that you can find out where it is that you need work, and then we have material that helps you with that. You see up in the upper left the importance of plan, prepare, execute, and assess. We have way over on the right-hand side under management how we treat our trading process as a business with many different role players, and each of those role players has an important contribution to make to what it is that we do. And they might be individual people, they might be parts of you that are influencing the way that you operate. But you want to have all those guys on the team. We use, under processes, systematic, visual, and robust processes that are modeled after the best practices of industrial manufacturing, like the Toyota production system, because we approach trading in the same way that we want to be around for thousands of trades, each one done properly with continuous improvement and high quality standards. And there's ways that you can do that following those principles that will help you. In the lower right-hand corner under alignment, it's, I think, very important to make sure that your strategic purpose, identity, missions, and values are connected through everything you do in operations down into the way that you perform the tactical trading each and every time. That you want to be aligned from the core of your being into the work of your hands, and so strategic alignment is an important part of the way that we conduct assessment and development. Under the learning block, there's just a lot of things that we know about creating a collaborative learning environment that has found its way into all our courses, and that comes from, my background of about 30 years of graduate level instruction as a teacher and as a student, and these have had robust benefits to my students, whether they're soccer players or undergraduate students or doctoral candidates or military officers or traders. In the pack, you'll just see my professional footprints, and those are all the places that we post a lot of our work. And I just wanted you to have the links. I can answer questions about them later, but I'm not going to dwell too much onto it, except to say I would highlight tortoisecapital.net as a place to find the briefings from those students that I thought are so amazing. And then if you look at the YouTube channel for video distribution, over the last month or so, I've probably posted 40 or 50 of our videos into the public domain, so you can get a real sense of what it is that we do every night and every weekend and as part of our coaching. And you may find that it resonates with you. So those are there for your enjoyment. I want to talk about these big ideas now for a moment. And the compound critical state is the essential idea in sniper trading, and it has everything to do with how we find targets, how we think about framing them, and I think the approach, at least, is a unique combination of a couple ideas that get us into the ballpark, and I want to talk through that idea in a little more detail in a minute. But the idea in general of a compound critical state is that a critical state is something we define as it's a moment in the trade when we would not be surprised if there was a larger than normal move in either direction in a shorter than normal period of time. So it's just before the explosion. It's just before the jack-in-a-box jumps out and surprises the herd. It's a very quiet night around a very still pond, and somebody throws a big rock in there, makes a big splash, and it spooks the herd, and off they go. We don't know where they're going, but they're going hard in every direction. Well, we think that identifying critical states is a good idea because you can take advantage of getting the biggest moves in the shortest amount of time if you have a standard way to handle that abnormal condition. So when we think now about a critical state in a particular time frame, we mean that the market participants, the people who trade that time frame normally, would look at this and say, wow, there's something significant about to happen, and they get a little nervous and agitated and ready to react emotionally. That's what I want to see in the other market participants. That's what leads to a critical state. A compound critical state would then be a case when other time frames for this same symbol are also in a critical state for people participating in that time frame. So what I would ideally like to see is a symbol that's in a critical state on a weekly basis, so that those long-term buy and holders are very, very slow swing traders are ready to move hard in either direction, because they're going to bring a lot of money and reinforcement to that, and they're going to be in it for the long haul, so their money can actually move that market long distances in one or other direction. So I want that kind of energy coming in. Same thing with day traders, same thing with hourly bar traders, same thing with 10-minute bar traders, same with 2-minute bar traders, same thing with tick traders. I want everybody associated with that symbol to be feeling like they are in a critical state, and when all of those things stack up, once that thing moves out of its minimum manageable risk box, then I'm more likely to see that standard small move become an abnormal condition where you get a runaway move that just won't quit. If I can trade that in the way that I always trade, managing my risk up or down the price ladder, then I'm in the position to leverage my preparation, my self-discipline, my non-directional bias. I don't care which way it goes. I just think it's going to go large. So if I can find compound critical states, I think I can put myself in a position where I can make low-risk trades that occasionally become extraordinary results. And I can map my success by taking a look at the histogram of my results over large populations of trades. I can determine how many times that little breakout from the critical state box turned into a small move, a large normal move, or an abnormally large move. And I can get some feel for how sensitive the market is to what I'm calling compound critical states. The good news is so far so good. It's looking pretty good. An essential part of this is the idea of standard work in abnormal conditions. And by that, what I mean is this. If you have a large directional move and you find yourself managing your exit and your stop so that you can keep the right amount of risk on there but preserve some of the gains, you might end up making 10 decisions in that trade. The first decision to enter, the 10th decision to exit, and then you might have made 8 adjustment decisions to manage your exit. Well, if you are using standard work on each of those exit management positions and decisions, all you're doing is the same technique every time and adjusting the reward to risk ratio as you go, locking in a little bit more of the trade, yet giving it enough room to run, but recognizing when we're at a turning point and it's gone far enough and you captured a nice gain. Well, if that's our ideal template for trade management, then you can quickly see that the entry is the least important one of those, because it happens one time. And that 8 out of the 10 are those adjustment stops. So if you were going to be very good and reliable and professional in those 10 decisions, you want it to be on how you manage the stop to your own professional satisfaction. And then the secret sauce on this one is that the last decision to exit was not even an intention of yours. It simply means that the price hit the stop that you'd established and the market made that decision for you. And then the secondary secret sauce is that the same kind of trade framing that you do to manage your risk as you go is the same trade framing that you use on establishing the initial trade frame. So you are using standard work to assess the manageable reward to risk as you go. That's what we mean by standard work in abnormal conditions. I manage every trade the same way, with the same formula, the same visualization, and that's what we mean by standard work. One of the central elements of this approach is the idea of the minimum manageable risk box, which is a box that we establish based on our personal learning and trading practice. And we learn what's the size of the box that I can establish such that if I enter in one direction and it moves against me, I can get out of that trade reliably with not more than a 1R loss, a 1 execution risk loss. If I can do that for 100 trades and never take a greater than 1R loss, then I am entitled to believe, provisionally, that I can frame a 1R risk and then manage to that. If I then take that minimum manageable risk box and I compare it to what I consider to be a reasonable return if it moves in a certain direction, and if I can make that 10 to 1, and if I can average 5 to 1, then I'm going to be pretty happy. And if I can look at my trade histogram, I can then take a look at what is the performance R, or the capture R, versus the execution R, and then I can determine what my actual ability to frame reasonable reward to risk ratios are in those critical states. The next feature of that is if I can establish my minimum manageable risk box at a certain level, it's important to try to reduce that to the smallest size so that I can reap the biggest rewards when it pays off. If I was going to then compare that to my position sizing risk, I would then insist that I want my position sizing risk to be 5 times larger than my execution risk. In other words, once I've identified a minimum manageable risk box, I want to set that equal to a 0.2 loss. So that if I take that 0.2 loss, it just feels like a routine ante, and I didn't get cards in poker. So I'm risking a fraction of an R, but I'm looking for a potential 10 to 1 payoff. Now what that means in practical terms for position sizing is that if I actually get those 10 execution risks, then I'm going to have a 2R position sizing win. So we have some techniques that we use in every time frame that we trade in on how to turn that into actual numbers and how to develop the skills. And the intraday stuff is particularly interesting, and that's what the guys who are doing the intraday trading are going towards and using quite effectively. I would just add the next big idea, the trade framing and visualization, drops down from the big, because that's so important, because once I start looking at the trading ecosystem, the range within which price could be normal, and I start using that MMRB box, I can start seeing the normal moves as a function of those standard bricks. It feels like just a standard brick, and I can quickly frame on any time frame the trade in either direction and determine if what we have is a compound critical state. So that is such a powerful, liberating tool that I can't overestimate its importance. The final piece that I would say is the importance of bar-by-bar trading in your trading practice. Every one of the guys on that list that you see has gone through bar-by-bar trading live, in public, on the record, 100 or more times. Ken H. did it 1,000 times. Luke has done it 1,000 times. And part of their muscle memory that they're developing is how to execute flawlessly based on what it is that they say they want to do. And so we use the bar-by-bar training in public in order to build the muscle memory and the cardiovascular fitness to make a lot of decisions in this long-distance race that we're running. So those 5 big ideas are essential. I want to provide just a brief course update for what we got. The Creativity 202 course sounds difficult. It's a 30-week course. It features 2 or 3 hours a week of effort and about a 2-hour-a-week true storytelling circle in which guys come together and talk about the insights that they got from the creativity lesson and the trading lesson that was in there, and they learn to share those ideas in powerful ways with trusted others. And not only are we learning how to become more creative in a reliable way, better traders in a reliable way, but also how to build a stable learning community of practice. And we've developed a lot of accountability partnerings out of that course. So we're about halfway through. I'm so grateful to the guys who went through the initial implementation of that course, and they agreed to record all of those true storytelling sessions, and we have over 100 hours of worked material already where they're working through the lessons and talking about the insights and how it fits together with some surprising insights, and that's become part of the Creativity 202 course. Here's how good that Creativity course is. It is a game changer for the Army. It's a game changer for Fortune 50 companies. So I worked in partnership with Angus Fletcher, Professor Angus Fletcher of the Ohio State University. And so what he's bringing to that course is story science at a world-class level. I've been working with him on an artificial intelligence program for DARPA, the Department of Defense Advanced Research and Projects Agency, the guys who invented the internet. We're working with DARPA on artificial intelligence to provide our military commanders with robust, reliable, personalized advice on how to deal with the stress of combat and become more effective. Fletcher has partnered with some AI experts in the world and gotten some funding lined up for an AI startup company which is going to do the same thing, only apply it to a search engine that allows you to have a trusted, adaptive learning assistant who will find things in the world, whether it's on YouTube or Amazon or Netflix or Google or Facebook or any source of media, that is designed to help you become educated, enlightened, and entertained. And it will learn from you how to give you what you're looking for in the same way that the military implementation of that is going to help us make better decisions. So the investment bank came back and priced that at 9 figures. They think that idea is worth $1 billion. Now, I personally think that is undervaluing, which is why it's an interesting company. Because I think that Fletcher's treatment for creativity will bring a 3% improvement of performance in every problem you're trying to solve or every opportunity you're trying to solve multiple times a day, a week, a month, a year. You know who's interested in a 3% return on innovation? Every CEO in the world, every organization in the world that's fighting to create value and fighting for survival. So the principles that Fletcher has uncovered for creativity and how to teach it are written into the handbook, the Field Guide to Creativity for Army Leaders, that he wrote for me to use in the Army. We've used that book to build out the Creativity 202 course. We also bring in the true storytelling insights from my doctoral mentor, Dr. David Boji, who created the field of organizational storytelling 40 years ago and is still the most influential writer, academic, and practitioner on story in the world. He's trained me in that, and so I know how to lead true story circles, and I'm doing postdoctoral research with him on that. But then we also bring in my humble yet lovable work in Tortoise Trading Foundations, where I just emphasize how to do standard work and how to do routine things routinely. Well, when you combine those three bodies of knowledge, you get the test taking versus life living of Fletcher's work, which is you want to unleash the power of natural forces in your brain and let the power of nature unleash the creativity that is already in your brain just waiting to get out. Instead of trying to adopt a test taking and compliance and zero defect mentality, Fletcher's treatment for creativity is kind of us getting back to our roots, the things that have made us evolutionarily successful, by unleashing the natural forces within us in a reliable way that's easy to learn and fun to do. And the effect persists. As we've shown that we just did at our Army College, which is going to get published in Harvard Business Review and in the Journal of Narrative, which is the top level narrative in the world on story science. It is powerful. Well, you bring those three things together into an effective community of practice in a collaborative learning environment, and what you get when you add in the things that I know about sustainable learning and the creation of learning artifacts, you get what I would call the maximum sustainable rate of learning. Now, here's why Department of Defense is adopting this approach to teaching creativity. It's going into Army University, where there are 7,000 faculty members and 200,000 students a year who are going to learn these techniques for their military mission. The Department of Defense budget is $1 trillion a year, which is shameful in of itself, but a fact of life. If you could get a 3% improvement in performance on $1 trillion budget, it would be worth $35 billion. And that's why I've got the attention of senior Army leaders about what we're doing with creativity. And let me just tell you, there's no other place in the world where you're going to get those three bodies of knowledge into one effective, sustainable learning program, and that's in the Creativity 202 course. You can ask any of the guys that are in it. You can watch any of the videos that I've posted about it, and you will, I think, come to a conclusion for yourself, and I trust your own judgment on that. So when I talk about Creativity 202 as being a game changer, it's because of the power of 3% improvements compounded in every single thing that you do. It's astonishing. I want to say that the Foundations course that we have is being updated constantly, because a lot of the things that spin out of the Creativity 202 go right into the Foundations course. And in fact, the things that we're doing and learning from our Kata 2, the Sniper course, the Bar by Bar, and the Hybrid Trading, the best of those that are foundational are going into the Foundations course continually. So that thing is not standing still. It is a live, living workshop. And you can see it happening in the nightly podcasts, on the weekend podcasts, and then documented in each of the focus courses that you see below. The hybrid core, swing, and day courses continue to be excellent. Home study, self-paced courses for experienced traders. Core trading for folks that are in it for the long haul, like monthly adjustments. Swing trading if you're interested in 10 days to a couple weeks per trade. Intraday trading for folks that want to have large position sizes and no overnight risks and lots of opportunities. Hybrid trading is how we blend those things together to take advantage of the information that they can share, so that we can use all time frames to help us find those compound critical states and work on them together. The bar by bar trading is simply the workshop in which you are doing live decision making on the record to implement under pressure how to do that kind of focus trading. Sniper trading and the Kata 2 challenge are personalized implementations. They're doing very well. And I told you about Constantine, who's become a prop trader with other people's money. He's using a form of sniper trading for his particular target, and he's crushing it. So I would just say I provided you this list of connections and footprints for you to look around at your own rate. I wanted to show the idea behind the sniper trade here, and the idea of location volatility. I want to finish up with that, but I got to refresh the slide. It didn't want to show me that slide. So while I'm pulling up a refresh on that slide, I would invite you to post any questions in there. I noticed that I've consumed an hour of our lives together here, and I'm happy to answer questions here while I'm trying to get this other piece loaded up. Where are we? BTI podcast. Let's try that. Nope, that didn't work. Looking for questions in there. Pending questions, what I want to say is the essential ideas of the sniper trade is that critical states come about from a combination of location and volatility. And let's see. We'll try this one here. And when we talk about location, oh, I see what happened there. Yeah, the chart's not letting me show. So what I want to do instead is I'll just talk you through it, and you can see it in every daily report and every nightly podcast that we do. That the idea behind trade location is that when you take a look at the look-back periods, oh, maybe this is going to work. Nope. When you look at look-back periods, we take a look at where the price location is on the 10-day, 30-day, and 150-day look-back. And when price is at an extreme condition, either way overbought or way oversold, then the likelihood of a sharp reaction out of that compound position is more likely. When it's way overbought, it could keep going and break out asymptotically. It could also make a sharp move to preserve profit and go back to the mean. So by being dramatically overbought, it could go large in either direction. If it can be dramatically oversold, it can go large in either direction. So we look for an extreme condition on 10 days, 30 days, and 150 days to get a feel for how the market participants are feeling about their position. When it comes to volatility, we know that volatility is a bigger factor on the shorter term. So we actually look at 1-day volatility today and 5-day volatility. What has the move been like on net over the last 5 days? And if we find abnormally large or abnormally small volatility, then we have a belief that the market has an emotional state that is prone to surprise big moves. Like if it's large volatility, it's already running crazy. We like that. The herd is in the movement. If it's very, very quiet, then the herd is ready to be spooked, and there could be a surprise large move. So by combining those 5 elements, 3 different locations and 2 different measures of volatility, we can find symbols that are in extreme conditions, compound critical states, and then we use 4 standard patterns to trade them once they start moving. That's the second part of sniper trading, is that you use planning and preparation to find symbols that are in complex, compound critical states, and then standard patterns to execute the pattern once it starts moving in a reliable way, the same way that the sniper sets up every time the same way, goes through the same procedures to deliver the shot in a way that's effective while taking care of his own security. So that's everything I want to say about that. I will actually talk more about that next week because I think that would be useful for you. to look at some living examples. So that's everything that I want to say. Let's see. Oh, Greg G says, since the foundations course is constantly adapting when it gets updated, do you get when you take the foundations course from me, you get the entire course forever, one-time payment. So as I update it, you get the updates, continuous access to it. It's been my experience that that is the best way to teach, to remove the time pressure from you, and to allow you to absorb the material in the way that makes sense to you. The Foundations course is actually 4 different courses. There is elements of trading. There is a psychology. There is some trading lessons. There are some systems thinking lessons in there. So we've mixed together 4 different bites at the apple to give you a broad approach to the way we trade. But there's also a couple patterns in there that are essentially the sniper patterns, which are foundational to every time frame. I will tell you right off, up front and personal, when I'm swing trading on monthly or weekly charts, I'm using the sniper patterns to frame the trades, and then I just manage them on those time frames. But the sniper patterns are robust. They are fractal in nature. The pattern is the pattern regardless of whether I'm looking at monthly charts or minute charts. The way to interpret them is the same. What makes it different is how often the decision cycle comes around and how big the minimum manageable risk box is. When you set up a critical state on a monthly chart, the amount of adverse price action that you got to get to make it invalid is much larger than if it was a 1-minute chart. But the principle is exactly the same. Once you get used to looking at the market through that lens, you end up seeing very easily how to adopt a hybrid approach in which you are doing some day trading, and if it works, it leads into a swing trade, and if it works, it goes into a core position. And it also works the other way, where some of your long-term positions turn out to be in a critical state, and you find a way that you can leverage that information with a faster swing trade while that opportunity is there. And then you may be able to put turbo on that swing trade and trade it intraday. The best intraday trade target, in my view, is a symbol that is in a swing trade that's working, and there is a directional bias for all the market participants. Well, if I have the ability to trade intraday and I can pick up some of that momentum from the swing trade that's going to carry it for a large move, I've really simplified my search for a low-risk idea, and that's one of the essential elements of hybrid trading. You'll see that reinforced in every lesson that we teach. You'll see that reinforced on Ken H's weekend trade frames. Go take a look at the YouTube video on last night's swing trade review. He puts a 3-part chart up there that shows weekly, daily, and hourly charts side by side, so that we can see what the critical states are, and we can make a consolidated trading plan off a single screen that incorporates multiple time frames. That's what we mean by a multi-time frame, multi-lens analysis. We're looking at multiple time frames, and then we're considering things like standard patterns, support and resistance, the regression line crossover framework, 4 seasons of the MACD histogram. We're looking at all of our charts through multiple lenses over multiple time frames to stack up all the advantages in our favor. And you'll see that reflected on the publicly posted videos on the YouTube channel that I showed you, and I would invite you to review that stuff. I will also say that the Nightly Strategy podcast is open to you as long as you want, whether you're a subscriber or a student. If you just want to listen in, that's fine. The only thing that I would ask you to do is to be respectful and quiet about the folks that are going through the bar-by-bar training, and are getting the feedback on their charts, and when I'm giving an interpretation of the reports to help people find targets. I would ask you not to ask a lot of questions in there without having taken the courses. But I think that you would see enough of the material to get a handle on what it is we're doing. And you would know that if you looked at our publicly available YouTube videos. But you're more than welcome to come listen to those podcasts. Now, the reason to be a subscriber is I'll answer your questions. And you get access to the last 3 years of nightly podcast archives, which includes all of the bar-by-bar personalized coaching. And all of the daily and weekend reports are in an archive, plus all of the opportunities that we see during the day when we push out an opportunity. I'll tell you, go take a look at the one on, it was either Thursday or Friday, I think it was Thursday, when Joe Biden, in a search for votes, decided to announce a pardon for possession of marijuana for federal convictions. MSOS, the ETF that is on our tactical trading list for exactly that reason, in the last 40 minutes of the day, had a 35% move, which gave us a 10R win by trading an abnormal condition in the standard way. And you can see me talking through that as the sniper trade of the day on Thursday last week. That's an example of trading an abnormal condition with standard work. And all we aim to do is take what the market will give us in a low-risk way. So I would invite you to watch the videos. So that's I think that's everything I wanted to say today. I want to respect your time on a holiday, and I appreciate your time and courtesy. And the slides are all available. I think Sarah's got them for download. And happy to answer your questions, next week after you've had a chance to graze around through the material and see what it is that we're doing. I would really invite you to look at the tortoisecapital.net homepage. At the very top of that, you'll see all of the 20 to 30 minute presentations of those students and where they were a year ago and where they are now. They're getting ready to update their annual presentations as a work in progress. So I would invite you to listen to their work. It's amazingly good. It's a humbling experience as a teacher to see the students exceed the teacher. The students have become the teachers, and I'm happy to see it. So, Sarah, that's everything I got for us. Back over to you, and thank you so much for the opportunity.
Thank you, Ken, and thank you, everyone, for attending. If you do have a question that comes up before next week's webinar, you can feel free to reach out to me at customerservice@vantharp.com. Thanks again, Ken, and we'll see you next time.
You guys have a good holiday. Cheers.